So a while back, I made a video explaining what support and resistances are. However, the objective of this video isn't to explain what support and resistances are, but rather to explain how to use them properly, right? Because in reality, supports and resistances are pretty much the basic bare minimum level of technical analysis. So in this video, since I already made a video explaining what it is, I kind of just want to explain how to use it properly, since oftentimes individuals interpret it incorrectly, and this could often lead to individuals losing money on a trade, and of course we don't want that to happen. So with that being said, let's go ahead and take a look into this board. I'm just going to step aside, and now I just want to put a quick disclaimer. I'm not an artiste, right? Also, I'm doing it on this board, right? Simply because I could have just done this on the computer, on a screen share computer, right? But I recently bought this board, and if I make a video with this board, right, it's a tax write-off, right? So tax guy, if you're watching this video, you see, business purposes. Just kidding, all jokes aside, let's go ahead and kind of explain what's going on, and kind of explain how to properly utilize supports and resistances. So right here, we have obviously these candles, right? We have these green candles, which are bullish candles, and we have these red candles that are bearish candles, right? Green goes up, red goes down. Very simple. Then we also have this imaginary line, which is just a resistance line, and then we have this imaginary line over here, which is a support. Now the resistance, there's going to be a lot of selling interest, right? So typically when there is a price level approaching a previous resistance, or just a resistance, the stock is typically going to go down, right? Because there is selling interest. And then the inverse with support, when it's a stock, the price touches that support area, that support line, there is buying pressure, simply because the prices are low. So individuals are seeking opportunity to buy in at these low prices, and when things are high, individuals are selling at these high prices because they want to take advantage of just locking in profits, which is always good, right? But something that I see individuals often do is buy, like let's say you want to buy low and sell high. Oftentimes individuals just buy at the support, right? Because support means that it's probably going to bounce up, and you just buy it. So if you just buy at the support and sell at the resistance, you make a profit. Easy, right? However, it's not that quite simple, right? So let's think about this, right? So the stock doesn't have to do whatever you think it's going to do, right? And the reason I say this is because a lot of times people, they buy in at the support without waiting for confirmation, right? Or they sell at the resistance without waiting for confirmation. So what do I mean by this? Simply just because a stock touches that support level, you shouldn't buy here, right? And let's go ahead and let's get this yellow marker. This area right here, this area right here, you don't just buy just because it touched the support, right? Because what if it breaks that support? It could actually, go lower. Maybe it breaks that support, and that support gets rejected, right? Which is why you want to wait for confirmation. You want to see the price touch that area of support and start going up, right? Because as it goes up, that just validates or confirms that that support is holding true, right? That is an area where there is a lot of buying pressure and individuals are buying in, because it increases the odds of you making a profit, versus just simply just buying because it touched the support, because it could touch the support and break below. The stocks, they don't have to do what you want them to do, right? So the whole purpose of this video is to simply explain that you want to wait for confirmation. I feel like I preached this almost, right? But hey, if I need to be a preacher, I'll be a preacher. So you want to buy in possibly at the second candle, where you see that confirmation of a stock touching that support and bouncing up, right? Same for a resistance. I mean, it's always good to lock in profits, right? But oftentimes individuals may see something like this, where a stock touches that resistance, maybe goes down, but then touches that resistance, and you think, hey, it's going to go down again. But guess what? It doesn't. It breaks above that resistance, right? Because again, just because it's a resistance, just because it's a support, doesn't mean the stock actually has to do that. The price action could, do the complete opposite. It could break the trend, right? So just because, we see that there is a resistance around here, if you want to lock in profits because you bought in over here, that's completely fine. But you might want to wait for either, validation of a moving average breaking down. Now, I didn't draw a moving average on this chart because that is going to look too crazy. So you guys might want to check out my other videos to understand how to use these other indicators. But when it comes to, selling, there's times where, the stock could actually go and break a resistance, because again, it doesn't just have to, stop right there. Maybe, some catalyst news came out, and let's say this was Apple stock. Maybe Steve Jobs rose from the dead and now Apple stock is just going up, right? And obviously this is just hypothetical, obviously, but I just want to highlight that just because it touched this area the second time does not mean that it's going to go down. In fact, we see in this example that I drew, the price action broke above the resistance, right? So, the main focus of the video is simply just don't buy at support and sell at resistance. You want to wait for confirmation. You want to wait that's confirming that is bouncing from that area, showing that there's buying pressure. And before you sell, right? I mean, it's always good to lock in profits, of course, but before you sell, make sure, right, that there is confirmation that it is going down. Maybe if you touch it here and it shows that slightly going down, okay, you can sell it. But maybe it touches here and actually breaks above. So, why sell here when it could go higher, right? So with that being said, hopefully you guys like this video. Hopefully you guys like this Blackboard tax guide. You saw what just went down over here. Just joking. But with that being said, guys, make sure to subscribe to the channel. Also, leave down in the comment section below any questions you have. Also, consider checking out the links in the description below, because one of the links is going to be a link to my free Facebook group. And essentially, it's just a community that I'm building of individuals interested in trading and investing in the stock market. Alongside that, there's going to be a link for Webull, where if you download Webull and just deposit $100, you'll be eligible to receive 2 free stocks valued up to $2,000. Webull is a great platform. They have great charts to help you make better decisions for trading. And on top of that, it's free money just for depositing $100. You never know what free stocks you'll get. In fact, when I first signed up with Webull, I just signed up for the free stock. I was just going to sell Webull, whatever, but I actually got a free share of Google, which was worth $1,000 at the time. I think $1,200. Now Google's worth $2,400. So just for signing up for Webull, right, I got $2,400, right, just because they gave me that one free share of Google. And then I actually realized that Webull is a great platform to trade. It's a platform that I use. You guys know I wouldn't recommend a trading platform if I don't use it. But with that being said, guys, thank you guys for watching, and I'll see you on the next video.